All right, what's going on, everybody? Welcome back to the Achievement Apex. My name is Brendan Murphy, and today I've got a pretty good episode for you. I'm going to be talking about how you can know exactly whether your strategy is going to be profitable in the future without actually trading into the future first. And all you need to know is three things. So if you want to go from having a strategy idea, making the strategy, and then knowing it's going to be successful in the future without even putting money into it, then obviously this is the video for you because I'm going to teach you exactly how to do that. And not only does this tell you whether you're going to be successful, it also helps you to adjust your strategy so you can be more successful. So what is it? How do we know whether our strategy is going to be successful or not? And it's using the law of averages. So what is the law of averages? Well, basically, if you know a certain amount of variables, you can calculate whether your strategy is going to be successful. In the case of trading, you only need to know three things. So the first thing you need to know is the average win. And you can find out your average win by taking all of your winning trades and dividing the total amount of profit by the number of winning trades you took. So if you had 100 winning trades and in total you made $1,000 profit, you divide $1,000 by 100 trades, which would give you an average win of $10. And then the second thing you need is your average loss. And exactly the same, if you had 50 losses and the total losses was $250, that gives you an average loss of $5 per trade. So that's the first two things. We know our average win is $10 and our average loss is $5, but that doesn't guarantee we're going to make money. We also need to know the win rate, because without the win rate, even though you have a positive risk-reward ratio, seemingly, it might not pan into profit because you might not be winning enough. For example, if we take the average win of 10 and the average loss of 5, we need to win at least 25% of the time to break even, which should be very doable, but the average win and loss is not enough. That's what I'm saying. You need to know your win rate too. And your win rate can be found out by taking the total amount of winners you had and dividing that by the total number of trades. So if you had 50 winners and 100 total trades, then obviously that's a win rate of 50%. So once you know these three variables, you can use a formula to determine what's called your expectancy. And expectancy tells you exactly whether you'll be profitable. So if we have an average win of $10, an average loss of $5, and a win rate of 50%, here's how we can determine how successful we'll be. If we take 10 trades with a 50% win rate, that means 5 of them are winners. With a $10 average win, that means 5 winners times $10 is $50 profit in 10 trades. Then 5 trades were losers with an average loss of $5. So 5 times 5 is 25. So you ended up with a profit of $25 after your losers were factored into it. So if you know you make $25 over 10 trades, then you can figure out your expectancy or the amount of money you can expect to make from every trade. And in this case, it's $2.50 because 10 trades times $2.50 equals $25. So that means you can kind of say, okay, for every trade I make, regardless of whether it's a winner or loser, over the long term, I'm expected to make $2.50. So you place a trade, you know, boom, I've just made $2.50. Regardless of what it actually makes or loses, you know that if you keep following it, $2.50, $2.50, $2.50, $2.50, eventually that's going to add up. And you, even though you might have winners of 50 and losses of 20, over the long term, you average that out, $2.50 per trade. And it's always going to happen as long as your average win, your average loss, and your win rate stay the same. And they can change over time, as we know, because market conditions change. So if these variables can change, we can't guarantee that the future is going to be profitable, but you can still use it to make the future as good as possible. And here's how you do that. First, you'll back test, right? And you'll get your average win, loss, and win rate. And from there, you can say, okay, this is a profitable strategy worth trading. From there, you start collecting this information again. So in real active trading, this is my average win, loss, and win rate. And you keep a moving average of this. And you want to have quite a lot of data. Don't keep a one-day moving average because this is going to go all over the place. Have like a 1 month moving average or a 2 month, 3 month. And of course, the longer your moving average, the slower you'll be to react if market conditions change. But If it's too short, then you might think your strategy is not profitable when it was just a bad week, you know? So you got to try to find that balance between having too fast of a moving average of these variables or too slow that you can't even react and you lose too much by the time you can change. But basically, when you keep this moving average of your average win, average loss, and win rate, you can say, okay, in live trading, the average win was now $9, the average loss was $6. With the win rate of 50%, I'm still profitable. And then you trade for another 6 months. Oh, okay, so the average win has dropped to 6. The average losses increased to 7 with a 50% win rate. Okay, we're not profitable now. We have to change the strategy to suit these new market conditions. And that's kind of the process that you'll use to optimize your strategy over time. Back test, this is my expectancy, $2.50 per trade. Real trading, this is my expectancy, $1.90 per trade. We keep trading, the thing's changed. I'm not quite profitable now. Make changes. Okay, now we're back into a positive expectancy. Let's keep trading. What's the new expectancy? It's good. Keep trading. If it's bad, adjust your strategy. I've probably said that enough now. You probably get the point. Okay, so that is how you can apply it to your trading. But the law of averages doesn't stop with trading. You can actually use this to guide your real life decision making, like whether that's in your personal life or your business or I don't know, sporting, like you can apply this to literally everything. And we do that by thinking in probabilities. So how do we think in probabilities? Well, you take a decision that you're going to make. We'll stick with investing for the first example. Someone comes to me with an opportunity. Hey, please invest in my business. This is how much I need. I need to figure out, okay, what is the probability that this decision works out for me? And of course, I can't possibly know for sure. So the best thing to do here is have your best possible guess. Okay, what's the chance that this guy's company is successful? Okay, we know that 80% of companies fail in the first 5 years or something like that. So if we say the chance of it being successful is 20%. Okay, so if he wants $10,000 of my money, how much does he think I'll make back in 5 years? So he says, oh, you make 50 grand. With a loss of 10,000 and a profit of 50,000 with a win rate of 20%, we can work out the expectancy for this business decision. Then we could say, okay, if we had 10 trades or, these business decisions, we can look at it as if it was a trade. We're going to win 2. So that's $100,000 profit, but we're going to lose 8. With a $10,000 loss per trade, that's $80,000 loss for $100,000 profit. So if we make enough of these exact business decisions, 10,000 investment, 50,000 payoff, 20% win rate, we know we're going to make on average $20,000 per business decision because some are going to fail and some are going to win. And those ones that win, they do outweigh those losses, even though the win percentage was 20%. Okay, so that's one example of how you could use it in real life. But, maybe you're not in a position to invest in other companies like that. What's a real life kind of way you could use it? Let's say your car needs to be serviced. You need to change the oil and change the oil filter. So we can figure out what the percent chance is we do it right, what the cost is if we fuck it up, and how much we save if we do it right. So if we know that paying a professional might cost $500, it's not that hard of a job, but I've never done one before. I'm going to have to Google it, watch other people do it. We'll say we have a success rate of 60%. There's a 60% chance we do this right. But if we mess up, not only have we wasted money on that oil and oil filter, we also have to pay the professional to fix our mistake and then do it properly. So let's say if it goes wrong, it's $1,000 loss. And if it goes right, then you save $250. So it's $250 profit if it goes well and $1,000 loss if you mess it up. With a win rate of 60%, we can work that out. 6 trades at $250 profit is $1,500 profit, and then 4 losses at $1,000 losses, which is $4,000 loss for $1,500 profit. So with these variables, we can say, all right, it's not going to pay off to try and do the car myself because I don't really know what I'm doing that well. At this point, it will work out cheaper for me to pay a professional. Of course, if you know more about cars, the success rate might be 90. And then you've got one trade for $1,000 loss and then 9 with a $250 profit. At that point, you can say, all right, I'm doing my oil every single time because I'm making money by not paying that professional. You know, you have to figure out what the percentages are for you. So that's another real life example. And we'll give one more example. Let's say you've just got a paycheck and there's some kind of, thing you want to buy just because you want that thing. You're not sure if you have enough money to do it. So you can say, okay, what's the percent chance that buying this thing leaves me with not enough money to pay rent? 20% chance. And if I can't pay rent, what's that going to cost me? Well, it could cost me the house, but let's just say, you have to borrow some money and then you have to pay that back with the interest. We'll say it costs you $200 if it goes wrong. So that's a $200 loss with a win rate of 80%. And then how much money do we make if it goes well? The thing itself doesn't make us money. So the profit is technically $0, but let's say if we can try to attach a profit number to the amount of enjoyment we'll get out of the item. Let's say you really, really love this item. You're going to use it every day. You love it so much. It's so perfect. You've been wanting it for a long time. We'll say that the profit here is $50 because it's not really making you profit, but it's making your life better. So we'll say $50, with a win rate of 80%, a loss of 150 and a profit of $50. Okay, that's 8 wins at $50, $400 profit. 2 losses at $150, that's $300 loss. Okay, we now know that the law of averages, by making this decision, I'm going to end up with $100 profit after 10 trades. So I can make this decision. But once again, these percentages might be different to you, and you have to factor in other things like can you handle it emotionally? Because even though you work out the expectancy with a 10% win rate, yes, I'm going to make money, 10% win rate sucks. It feels terrible to make trade after trade after trade after trade after trade, and they're just losing. It feels terrible. And just because your win rate's 10% doesn't mean you're going to win 1 in every 10. You could go 50 trades without winning, right? That is, I know I can't handle that. Some people can, not me. So, but that's a whole nother thing that comes into emotion and psychology and all that. But you get the idea now, right? If you can calculate what the loss is for something going wrong, what the profit is for something going right, and what the likelihood of it going right is, you can calculate if that decision is worth taking, whether that's in day trading, whether that's in business, whether that's in working on your car, every single part of your life, you can use this to make better decisions. And this is what I try to do with most of my decisions. Although I don't necessarily break it down into wins and losses, and I already know what the payoff is if it goes right. And that's the thing. When you start, you might have to start by defining all these variables, but eventually it becomes kind of intuitive, and you make this kind of decision without even thinking about it. The old kind of random emotional decision making, it just gets replaced, and you don't have to worry about it anymore. And the other reason this kind of decision making is good is you can have more realistic expectations. So for example, if you didn't do this, the win rate's 10%, although it's profitable, you don't know it, right? And you have 20 losses in a row. And then you're saying, oh, this strategy is terrible. I'm never doing it again. Look at that, 20 losses, all my money gone. You might have been 1 win away from a bunch of profit, right? And so if you had done that equation, you could say, all right, 25 losses, this is all right. I know that if I stick to this long enough, I'm going to have that massive winner that puts me in profit. So to recap, to know if a decision you make will be successful, you need to know the average win, the average loss, and the likelihood of it winning. From there, you can do the equation. How many wins? This much profit. How many losses? This much loss. Then subtract the loss from the win. Boom. Are you in profit? Are you in loss? If you're in profit, make that decision. If you do this with every decision in your life is going to get better and better and better and better and better every single time, because you know these decisions are profitable. So I hope you found this video valuable. If you did, and you have a friend or someone that's also into investing or wants to, make better decisions, please share it with them, because it not only helps them out, it also helps me out. If you want to see more videos like this, please subscribe to the channel, leave a comment, like the video, all the cool stuff. And if you want to take your trading to the next level, you can visit my website, theachievementapex.com. I make custom trading algorithms designed specifically for you and your goals. And I have one-on-one check-ins available every month if you want to go over every aspect of your trading and optimize it to produce the best returns you can. Thanks for watching. See you in the next one. Bye-bye.